Tesla is hosting its annual shareholder meeting on August 4th of this year, which is actually just 9 months after the last shareholder meeting, which occurred last year in October. This year's meeting is quite a big deal for shareholders as they expect to vote for a 3-to-1 stock split, which obviously doesn't affect Tesla's business directly in any way. However, it could make Tesla's high-priced $900 shares more accessible to smaller retail investors by splitting this dollar value by 3 and giving each investor 3 times as many shares. Stock splits also act as a signal to shareholders as a vote of confidence in the business. Companies typically don't split their stock if they think it's on the way down. Tesla has also received a recent vote of confidence from Elon Musk's brother, Kimbal Musk, who exercised options back in late July to buy 25,000 more shares of the company. He stated that, "Tesla is just getting started. I can't wait for the next decade of awesome for my brother and his amazing team," which further adds to the bullishness when insiders are buying shares of their company since they see what's happening from within and the work going into the firm's future roadmap. While shareholder meetings in general are usually quite boring, Elon Musk makes it more exciting for shareholders of all kinds by answering questions about the company, the cars, and the business, just as he did last year at Tesla's brand new Giga Texas factory at the time. This year, we're likely to hear more about the Gigafactory itself, as Tesla is calling this annual shareholder meeting the Cyber Roundup, which may hint at more information about the status of the factory as well as the roadmap, including the Cybertruck plans. But let's dive into some of the shareholder questions that are expected to be asked and answered during the 2022 annual meeting of stockholders to get ahead of some of them and add more context and information with the goal of helping investors to keep an eye out for key details that might be revealed by Elon Musk or others on the management team. The first question, which comes from retail investors posting on Say, asks, how does Tesla intend to utilize cash in the coming few years? Will Tesla increase Capex, share buybacks, dividends, or acquisitions? To me, this is interesting how this got to be the number one voted on question, because the answer doesn't seem to be too important. Tesla is in growth mode, and so right now, you typically don't want to see share buybacks, and especially not committing to dividend payments at this time, since you want them to use the money to invest in the business. Everywhere Tesla looks, there's opportunity to disrupt and grow, and so as a shareholder, you want them to take advantage of that so that many years down the road, when the business starts to stabilize, that's when it makes a lot more sense to pay a consistent dividend, for instance, when cash flow is predictable. That said, if Tesla shares get ridiculously cheap, and arguably they did in the $600 range just a few weeks ago, it may make sense to do a buyback. But actually, even Elon Musk said that the company converted its Bitcoin into fiat in order to increase their liquidity and reduce risk to uncertainty related to shutdowns in China. So while investors look at Tesla's $18 billion cash hoard and say, well, that's a lot of money, they should return that to shareholders, it's actually not that much for a $1 trillion company. If you look at how much business Tesla actually does, the volume of cars that they sell, material or equipment purchases, Tesla does billions of dollars of business. They just did $16 billion of sales in the most recent quarter alone. So Tesla's $18 billion of cash just represents about 1.8% of their market cap. If we look at other large companies such as Apple with $200 billion in cash, Google with $169 billion, Microsoft $132 billion, and so forth, it's very useful for these companies to have massive liquidity in case anything goes wrong for a few quarters, or just to give them all the financial flexibility they need and then some if they want to make acquisitions or just to weather any type of storm and sustain the company for many years in the future. So given Tesla's size, and if investors believe that Tesla will get even bigger, the argument could be made that Tesla doesn't yet even have a large enough cash cushion. And by the way, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data going back 10 years, and it's all freely available. The next question from retail investors is how many factories are necessary to achieve the long-term target of 20 million vehicles per year? I actually don't think that this number is very high. Most people think that each Gigafactory is only capable of 500,000 vehicles, and I've touched on this in a number of past videos. But we're already seeing Giga Shanghai approaching 1 million vehicles, and even Fremont, the most inefficient factory due to its patchwork layout and other reasons, is expected to be closer to 1 million after upgrades. I don't think that Tesla built a massive Giga Texas building with cutting-edge technology that allows for huge floor space reductions but with higher output if they're only planning to make 1 million cars the same as Fremont. That doesn't make much sense. 1 million will be the first phase, but when Tesla comes out with a more affordable car than the Model 3, which is looking like that may occur in 2024, I think that the volume on that will be much higher than the Model 3 or the Model Y, and will be built at Giga Shanghai, Texas, and Berlin. So eventually these factories may be able to do 3 or 4 million cars per year is my guess, and so even if Fremont is stuck at 1 million, Tesla would only need another 2 or 3 gigafactories to hit 20 million vehicles per year by 2030, which gives them plenty of time, not to mention that the technology level in 3 or 4 years from now will be much better than today, allowing new factories to be even more efficient. Moving to the next question, when the Cybertruck pricing is released, will all who ordered before it was taken down be grandfathered in or have to reconfigure? When will pricing be released? The Cybertruck pricing has been taken off the website. Tesla originally set the pricing for 1, 2, or 3 motor Cybertrucks. However, there's rumors that when it hits production, we may only see a 2 and 4 motor version, which means that the pricing would have to change at least for people who order the 1 and 3 motors, for which these variations won't exist. So this is a great question to ask, especially since inflation has increased the cost for all vehicles and Tesla may need to change the price. It would be nice if they kept the 2-motor price of $50,000 and then allowed early reservation holders for any version to still get that price for the 2-motor version, whereas newcomers would pay a higher price. That said, if Tesla does in fact do a quad-motor Cybertruck, they can price it at whatever they want, since there's no one that has a reservation for that, and start with producing that more expensive vehicle first. Once they get the volume to be high enough, they can look at cutting costs to get closer to consumers' original order prices. The next question, what is the real estate strategy for superchargers and Tesla restaurant locations across the US? This would be good for Elon Musk to talk about, but I believe that Tesla doesn't actually buy the land under their superchargers, but instead partners with landowners or businesses, since adding superchargers would bring in additional customers for these small businesses. And Tesla also benefits by essentially opening a gas station equivalent in every parking lot, and Tesla gets to set the prices, so it's a win-win situation. Tesla is also planning a Tesla restaurant in LA, so it would be interesting to see if Elon Musk is planning to expand this initiative to other supercharger locations as well. How is Tesla viewing the geopolitical risk between the US and China? This is a great question. I believe Elon Musk has tried to answer it before in past conference calls, saying that any tensions aren't really affecting Tesla. But with Nancy Pelosi's recent visit to Taiwan, it would be interesting if Elon Musk has any further comments on this. The next question is, with peak inflation behind us, are you now seeing recession as a challenge sometime in 2023? If yes, beyond layoffs, how is Tesla preparing for it? Well, Tesla did lay people off quite a bit earlier than most other companies. Tesla actually has a history of laying people off quite frequently when they get too big. And this is actually a fairly good strategy of overhiring and then laying off the bottom 10%, which Jack Welch, the former CEO of General Electric, used to do as well. Moreover, just because peak inflation may be behind us, which isn't 100% confirmed, there could still be large inflation numbers going forward. If we're currently in a recession, Tesla is fairly insulated from recession, given that it has a year of backlog on some of its products, and so there's massive demand, which means that Tesla will likely come out of this much stronger than they went in, given how lean they are and how their sales continue to see growth, not decline like most other automakers. When will the Tesla Semi be available? It seems that Elon Musk has already answered this in the past, which is in 2023. This year, 2022, is focused on the infrastructure, the tooling, and the batteries for these new products. And next year, Tesla should have enough scale to start releasing these new products such as the Tesla Semi in higher volume. What impacts will the upcoming EV tax credit for 2023 have on demand and pricing of Tesla's vehicles? The EV tax credit is fairly dumb. Its purpose is to increase demand, but Tesla and virtually all EV companies already have demand outstripping their supply, unless their electric vehicle really sucks. So the tax credit looks like it will just exacerbate this problem and make it worse. It would be better to incentivize the building of factories or sourcing local materials or onshoring more EV components to solidify future expansion of EVs for many years to come. The pricing is secondary, but Tesla would have the option of passing the tax credit to the consumer, keeping it for themselves, or a bit of both, half and half for instance. And finally, when will 4680 output match your original yield and velocity daily output targets? Now, this is an interesting question since expansion of the existing product and new product releases rely heavily on the 4680 battery cell. The 4680 will take many years to fully ramp up and become much more optimized, and it looks like Tesla is still running into bottlenecks while they try to scale this new technology. In 2022, Tesla will be using the non-structural 2170 pack at both Giga Texas and Berlin to increase vehicle output while they wait for the 4680 to ramp. The equipment for the 4680 at Giga Texas was actually just recently installed, so Tesla is just getting started at Giga Texas, while current Model Y vehicles rely on output from the pilot facility on Cato Road in California. That said, Tesla, Elon Musk, and Drew Baglino gave some color on the targets already for this year. They're seeing Cato Road growing at a staggering 35% per month, and by year end they want to see Giga Texas surpass Cato Road's output, which sounds like it will be quite significant for Tesla and their roadmap. So I hope this helped bring more information to you for the upcoming Cyber Roundup. Do you think that these are the most important questions to be asked during Tesla's shareholder meeting? Let me know in the comments what your top question would be to the Tesla management team. Please hit the like button and subscribe, we would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.